Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for December the 7th. So lots going on in the market right now, and this thing has been very volatile, and it's been showing a lot more strength than what it really deserves credit for. So I'm going to talk about all of that today. Also going to give you an update on some of the altcoins. Before I jump into the content, please do me a huge favor and hit the thumbs up button on this video. And don't forget to subscribe to the channel if you haven't already. Also, don't forget to click that little bell icon. Again, YouTube, apparently that's very important to them. So the first thing that I want to talk about before I go into any of the big picture stuff is I want to talk about this chart right here. This is a 4-hour chart, and I'm going to draw this a couple different ways for you to show you how dangerous it is to be trading Bitcoin right now. So this is the first way, and I think this is the most legitimate way to draw this chart. It's a symmetrical triangle with a 4-hour RSI trend line. And when we draw this 4-hour trend line, you can see here that this was a textbook bearish retest right around the same time it was testing the top of this triangle. This triangle, when you're entering a triangle, it's a symmetrical triangle, textbook analysis says that more oftentimes than not, you'll break out of that triangle the same way you entered it. So if you entered a triangle coming down, textbook analysis says you should break down from that triangle. So if you look at this, the other half of the technical analysis gives you a price target. The way you find the price target is by measuring the height of the triangle. So in this case, our triangle is roughly somewhere around $1,500 to $1,600. I'm going to say $1,500. I'm going to give it the benefit of the doubt. Okay. So then if we draw a target from the apex down, we're going to get a target down around $5,900. Some people like to draw it from the breakout. I like to use the apex. It's a little bit more conservative. So again, that's going to give us a target somewhere around $5,800 to $5,900 if this breaks down and hits its target. And again, the way we find that, we simply copy this, paste it over, we'll put it right here, and there's our breakout target, right around 58 or 5,900 bucks. So that's very bearish. But the reason that I'm not just jumping willy-nilly into a short position, even though that's backed up by RSI, is because I think there's another way you can draw this, and I think it's, a standard or a completely legitimate way to interpret this. I think you could still say, hey, look, we're making higher lows, but I think there could be some argument made that you're also finding resistance around the same level, right here, and we haven't come back up quite to that level yet, but we certainly could. And if you do, then of course this is not a symmetrical triangle, this is an ascending triangle. It could still break down. Some people like to use triangles as continuation patterns no matter what type of triangle it is. Me personally, I look at an ascending triangle as a reversal pattern, meaning that price is getting ready to change direction. If it came down into the triangle, then I expect it to come up out of the triangle. And here's what's very interesting about this triangle. If we measure this, it has a distance of about $1,164. And if I paste that on top of it, which would be the breakout, gives us a target right around $9,000. Now, here's why that matters. Because if we draw Fibonacci levels from our swing high to our swing low, I want you to look exactly where these Fibonacci levels are at. 61.8 is literally $9,040. That's really close to that breakout target. Okay, so that's the reason that I'm not getting into any large short swing positions. I just don't feel comfortable with it. I think there's a good enough chance that it breaks north that I'm willing to miss a move down, right? I lean toward a bearish stance. I lean toward it breaking down, but I'm not willing to risk money trying to catch it. Now, if it breaks down, okay, and it goes to 5,800, here's what I expect would happen next. Oops, don't want to delete those lines. I'm going to need them when I'm trading. But if it were to break down, and let's just say hypothetically that it got all the way down to that level around 5,800 bucks, here's what would happen. And by the way, here's another reason that I'm bearish. We had a bearish retest right here. So unless it breaks above that daily trend line, I'm going to be mainly bearish. Also, this green line that you're seeing, that is the 5-month trend line going all the way back to June. That's that thick green line. So again, it looks like a bearish retest to me that's probably going to get rejected and send us down to the bottom of our channel. So let's just say, for argument's sake, that this thing drops down to 5,800 bucks. Well, then we can redraw our Fibonacci levels. And I still don't think it's going to be capitulation. I still don't think it's going to be like, okay, the bottom is falling out. People are going into full-blown panic, and we're going to see $4,000, $3,000, $2,000 Bitcoin. Eventually, yeah, I think those are all valid possibilities, but I don't think it's going to happen this month. I think more likely what would happen is if we did drop down there, we'd probably drop down somewhere around here, right? And then we would have a relief bounce. And that relief bounce, I would expect it to make its way all the way back up to this area, this golden ratio area right here, this 61.8 level, which would be lower because we had a lower low. And if you look, that lines up quite nicely with the top of our channel, this channel that we've been inside of for 5 months. And I think that would be the most likely thing. I just absolutely destroy late bears, get bulls excited, get them trapped toward the end of the year, and then I think this would, start to move down after that, which I've talked about in plenty of videos. If you haven't seen my past videos, you can go back and watch them. I ramble about this all the time, but I would assume or expect that we would move down from there and start looking for a target down around first $5,000 and then eventually down around 4,100 and possibly even lower. Okay, so that's kind of the big picture stuff, and also the 4-hour time frame stuff. I've seen a lot of people on social media talking about, if we break above this line, it's bullish. If we break above this line, it's bullish. If we break above this line, the bottom is in. Guys, frankly, I'm so tired of these people talking about the bottom is in, I could puke, right? There's absolutely nothing on this chart that is bullish. Breaking above this green line is not a sign that the bottom is in. First of all, it's not even that smart to use the wicks. Okay, most professional traders will tell you to use the closes. I do think the wicks work okay in crypto. I mean, obviously, look how well they supported this. Look how well they act as resistance. So I tend to draw both and just try to keep an eye on both, which is why you see this red line. That's the closes, right? So if we break above the green, we can still go up and get stomped out by the red. We could go up to the top of the channel and get stopped. There's all kinds of things that we need to get through to be bullish. And the simplest way I can show you how this is just absolutely textbook bear market stuff is to show you a weekly chart, okay? I'm not going to show you this one. I'm going to go over to Twitter and I'm going to grab one that I shared earlier so I don't have to redo it. Okay, so this is the weekly chart, guys. If you look at it on a line chart, it removes all the wicks, it removes all the tails, it gives you a really clean chart without all the noise. If you look at the RSI, RSI is in the bear market zone. Anytime we've been in a bull market, the RSI on the weekly has been above this box. So for example, if I show you the weekly chart, see how it was above the box all back here during the bull run? This back here was late 2015 and it stayed above that box until the bear market started in 2018. So basically for over almost 2.5 years, it never fell inside of that box. Had a couple of little false breaks, but never really deep in that box. Once we got in that box, it was bear market. Where are we at? We're in that box, okay? So RSI paints a very bearish picture. And then if you look at the chart, this is this is as beginner gets, right? The first thing you learn in trading is that in a trend, lower highs and lower lows means you're in a downtrend, and higher highs and higher lows means you're in an uptrend. It is the basic building block of trading. It's the fundamental. If you don't get that part, you don't trade, right? So we had a textbook double top. Up. There's our first top. Here's our neck. Here's our second top. And once we broke this neckline, which is the yellow line, that was a confirmed double top. That's a very bearish signal. Fine. It went down. We had our lower high. Then we had a lower low. We came up and retested the neckline from underneath. That is what's called a bearish retest. It's completely standard to do that, which gave us a lower high. And then we came down and fell under this level, and this gave us a lower low. And we came up and retested this from the bottom. You can't really see it here because it's a line chart, but price did indeed come up and touch that perfectly. See here, it touched it just perfect. This is literally, if you were reading a textbook on trading and it was showing you what a downtrend looks like, this is what you would see. lower high, lower low. So for anybody to look at this chart and say, oh, the bottom is in, it is textbook stuff, right? It's not even up for debate. So that's what the weekly looks like. Now I'm going to show you something that I've never talked about in previous videos, but I thought it was interesting, so I'm going to bring it up. So this is a weekly chart, obviously. It's a candlestick chart. And I only have one moving average on there. I've got the 21-week moving average, which a lot of people were very excited about when we were moving up. They said, this is the bull market line. You know what? I actually think that they had a reason for that, and I think it was completely legitimate. And I agree with them. I also felt like this was a line of support or resistance in this market, because if you go back to 2017, you can see this thing really was a line of support, right? All the way back to 2015. It just rode on top of that thing the entire bull market. So I really feel strongly that that's a great line to keep an eye on. Of course, when we got into a bear market, it flipped to resistance and we stayed underneath it. Then we got back on top of it, right? And here we're underneath it. So when we had this crazy pump back in October, again, we had a bearish retest of that line. So I want that moving average on there. It's right around 92.45 right now. Remember, the longer price stays under it, the lower that line's going to get. So if we come up to that $9,000 or $9,100 area, or even the $8,500 area, we could be retesting that again. Who knows? So I wanted to leave that on there. But the other thing I wanted to point out was I've drawn a line from the top of 2017 to 23 weeks out, which was right here. I've done the same thing this year. I drew a line from the top to where we're at now, which is 23 weeks out. And then I drew these two yellow horizontal lines because this was our support / resistance this year. And now we have this line, which was support and has now flipped to resistance this year. And if we go back, look what happened in 2017. This was support, just like it was through here. We fell underneath it. We came back up and we retested it from below, kind of like we did right here. And then we moved down for 3 weeks straight. We moved down 4 weeks here. We had a little bit of a pause where we retested this line from the underside. The exact same line that we're retesting right now, by the way. And then the trend continued and it moved down until it found its bottom, which was where? $5,777. This is crazy similar to what we had 2 years ago. Okay, crazy similar. I mean, it's not just that the market structure looks similar, it's that it's the exact same lines of resistance and support, right? I mean, these are the exact same lines. Look at this. We're sitting here right on the same line we were in May of 2018. And then in June of 2018, it collapsed down to 57.77. And what is the level that a lot of people are talking about for a breakdown target? They're talking about $5,800. What level were we talking about just a few minutes ago in this video with that triangle? Right around $5,800 or $5,900. If we draw a extension on our trend, look at this. It gives us a target around $5,500. So right at the same point, at the same distance, 23 weeks into a bear market, we're sitting here playing at the same targets. So does this look like the bottom is in? Was the bottom in back here? No, not really, right? So no, I don't think the bottom is in. And now, if we zoom out and look at a BLX chart, hopefully I'm not throwing too much at you in one video here. I know I'm going on a little bit longer on Bitcoin than I meant to. We probably won't get to cover a lot of alts today, but I think this is important to understand because the bottom line is, alts, they tend to follow Bitcoin, okay? So here's what I've been saying all along, guys, is that this market looks a whole lot like the 2015 market where it had this false bottom, went up, and then actually came all the way back down. And by the way, this was bullish structure back here. This was a W, right? Down, up, down, higher low, boom, higher high. If I was trading this market back here, no doubt I would have been absolutely wrecked because this was bullish structure. Higher low, higher high, higher low, and you would have expected a higher high, and instead it did this crazy shit, right? But now we have the benefit of hindsight, and we can look at this and say, okay, we know that market structure, that market cycles are getting longer with Bitcoin. The first cycle only took about 2 years. The second cycle took about 4 years. So it's not entirely unfeasible to think, okay, this cycle is taking longer. And if this bear market last time was a year, it's entirely possible our new bear market is actually 2 years, which would explain why we're still moving down instead of making new all-time highs, or instead of putting in an uptrend. And look what happened in 2015. Once it put in a bottom in January of 2015, like forget all this. Let's not even worry about this in this video. Once it put a bottom in 2015, it actually moved sideways for about 8 months, and then it came down and retested that bottom. Now, it didn't get to the bottom of the tail, okay? It just got to the close. It retested the close. Well, we closed at $3,200, guys, right? That was our close in 2018, right at $3,200. So think about this. If we're looking at this weekly chart and we're halfway through this cycle, well, if it plays out just like it did in 2018 and we come back down to $3,200, we'll have the same thing we had in 2015, right? A retest of the bottom, except instead of being about 8 months later, it might be, 12, 14 months later, something like that, right? So say we do come down there, say we get a little pump up here and move down here, and then a little pump and then move down here, right? Maybe we come all the way down here, we retest this bottom, and maybe this is where, things finally bottom out. By the way, I don't think it goes straight back up. Maybe this is where things bottom out at, and then we can start moving up. And then again, that's right around May, June of next year, right around that halving. So, that'll satisfy the halving folks. People that think the halving is a huge thing, right? If you look at 2015, after that, there was no more, hesitation. It just took off and it started going. So, yeah, I think it would be perfectly feasible for this thing to come down, retest this bottom, still be a great asset to invest in, right? I don't know, but I still believe it's possible. And then I think that halving occurs right here, and maybe we do start marching up, right? That'd become nice. In fact, that'd be best case scenario for me, right? Reaccumulate tons of Bitcoin a whole lot cheaper than I sold it. It'd be awesome. Okay, so the video's long, so I don't want to do a bunch of altcoins today. I'll try to do more for you guys tomorrow, but I do want to talk about one altcoin, and it's Litecoin, and it's one I would definitely keep an eye on. I don't know what to do with this right now. That's why there's a question mark there. I think it's going to depend on what Bitcoin does a little bit, but I want to show you guys something. Litecoin actually is putting in this trend, this uptrend. This has actually been going on for a little over a year now, and it's found a lot of support right around this $44 level. Full disclosure, when I look at the weekly, I don't think it looks great on the weekly. The weekly has left me a little bit concerned, which is why I'm hesitant to enter into any type of position, right? Because this was a bearish retest. But when I look at the daily, it looks like it's got some potential. I'm going to keep an eye on this because this looks like an Adam and Eve bottom trying to form, right? So if it can break through this 48.68 level, I might be interested in trying to get into a position on Litecoin. I was saying the other day that I wasn't interested until it got down to 33, and I'm not as far as a position trade goes. But for a swing trade, I want to see if it can break 48.68. And one of the reasons that I'm curious about it is because I looked at the Bitcoin pair, right? So the USD chart was like, okay, it sort of kind of looks promising, but then I went and looked at the Bitcoin pair. Okay, so when I take a look at this over on, what is this, Bittrex, right? This is a Litecoin Bitcoin chart, and you can see that it actually does have a tiny little divergence trying to come in. So I want to watch this and see if the divergence disappears or not. If it disappears, then it's all out the window, right? But if it can actually lock in this divergence in a couple days when this candle closes, it could be that it's getting ready to pump. And what this number is right here, this is where the 200 daily moving average is at for the Bitcoin pair, which is about 41% away from where it's at right now. So the reason that was interesting to me is because, if the Bitcoin pair can pump, even if Bitcoin is dropping, if it can pump hard, then it could be a big enough pump that Litecoin will gain US dollar value. Okay, you can see here, this is the daily chart for the Bitcoin pair. Look at this. It's basically got a trend line that's got 4 touches here. 1, 2, 3, 4 touches, right? You got these 2 candles here that look like they're trying to put in, they're not really a double bottom because they're side by side, but they're not really long enough to be tweezer tops, but I would call them tweezer tops just for the lack of a better term, right? So these look bullish. If this daily candle can close like that, it could be a reversal signal where the dropping is done for a while. So if this thing does pump back up to its 200 moving average on the Bitcoin pair, the Litecoin US dollar pair might get a pump with it. So I wanted to mention that today because, you know, I was very, very bearish on it a couple days ago, and I saw this today and I thought, ooh, you know, again, not interested in a position trade because if Bitcoin keeps going down, it's likely to drag Litecoin with it. But maybe if I can get out in and out on a swing trade, especially if Bitcoin suddenly starts to pump toward, you know, 8,500 or 9 grand, Litecoin might have a really good day with that. So anyway, I think I'll look at one more thing for you guys because the video is just getting too long and they take a long time to edit because I make tons of mistakes and I get all these ums and ahs, and sometimes I cough and sometimes I slur my speech because I talk too fast, and so I got to go back and edit all that stuff out. It takes like 45 minutes. Okay, so here's December 7th, putting in what looks to be, again, this is a daily candle. This has a long time left before it closes, so we can't make trade decisions before a candle is closed. But if it closes, you know, below where it's at now, this looks pretty promising, right? Looks like it's putting in some little tweezer tops there, which means it could be coming down. And again, if dominance comes down and falls through that line, then I would expect it could come down to test that 200 level possibly, right? Looks awful similar to this 2017 stuff, right? But the first thing we have to do is test that line, see what happens. And if we break through it, then what I would want to see is I'd want to see a bearish retest before I got too excited, right? And then something like this. It's entirely possible it just bounces right off of it and that alts continue to get slaughtered. All right? With all that being said, guys, I'm going to go ahead and wrap the video up there. Please remember, I'm literally some guy sitting in a spare bedroom. Nothing in this video is trade advice or financial advice. You should always do your own due diligence before making any type of investment. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel, and don't forget to check the description for links where you can join my free Facebook group, follow me on Twitter, follow me on TradingView, and also where you can join my trading course if you'd like to learn how to trade. This is James with Crypto Common Sense. Trade safe.